Hi there, everyone, and welcome back to Real Estate Real and Unscripted with Nicole Miller. I am so excited to have you guys here today with us. Joining me is a VA loan specialist. He does all sorts of financing, but we're going to be talking about specifically VA loans that are out there for our veterans. And so today's show is going to be going through everything about those loans as much as we possibly can, dispelling myths, sharing, things that you may not know of. So with me today, I have Grant Simon, who is a loan officer with Ameris Bank, and he has been doing VA loans for quite some time now and is quite the expert. So I'm excited to have you with us today to drop some knowledge for everyone. So thank you, Grant, for joining us, and tell us a little bit about yourself, what brings you to this space that you're in now, about a little bit about your background. And then also, I'm very big about being different, doing things differently, elevating your space. What makes you different?
Well, thanks, Nicole, for having me. It's a pleasure to be here. So I hate to say that I am a 4-decade experienced originator. And just so you know, I got my license when I was 2. So if those of you listening can do the math, you'll figure this part out. But I've been doing real estate and mortgage banking for the last 4 decades. The greatest question I could ever be asked is what makes me different? And it's not so much the 4 decades of experience, but in addition to originating loans, what I do is I'm an instructor for the National Association of Realtors. I'm an instructor for the Florida Association of Realtors. And I've also write, present, and teach across the country. I've written over 20 continuing education classes, but I happen to, because this is a VA class, I teach the Military Relocation Professional Program for the National Association of Realtors. I've written several courses, continuing education courses on VA financing. One of them is called Navigating the VA's Loan Sales Process. So what I do there is I help realtors understand the entire sales process so that they can help veterans the best. The other class that I wrote, it was originally called military math. The problem with the topic military math is if you put math out there in the world, a lot of times realtors won't attend. So I changed the title to VA Finance Calculations Made Easy, and then we got a much better response to that. In addition to that, in working with veterans on a daily, weekly, and monthly basis, I think that's where the experience comes in, where I've probably seen everything, but just as I would tell you, I've seen everything. Next thing you know is you come across, a condition or an issue that you have to address. But luckily, I'm plugged in pretty well. For those of you listening, you're probably in the state of Florida. Our regional VA headquarters is in St. Petersburg, Florida. I've got them on speed dial. If there's anything you or I or they need to know, I've got them, like I say, on speed dial, but hopefully I don't do that. But with that said, Nicole, what makes me different is I'm an educator, I'm a communicator, and I'm an originator. So that's how I'd say it.
I love that. Thank you. And that's a big reason why I wanted to have you here. I started my business with that premise as well, that it was about education and making sure that, you were knowledgeable as much as you could. And it wasn't just about selling the home. So I really like that about you. So I'm glad to be able to have like minds on the show. And the fact that you teach all these classes is you've got so much behind you. And I think that that's amazing for our clients out there. You guys want to be with someone who has been doing this for a long time, who has all the resources and knowledge and experience and seeing everything possible so that you're given the best circumstances in your situation. So that's wonderful. I love that. So
yeah, additionally, I have a team behind me. So I'm not a one-man band. What's very unusual is that I work with my wife, and I've been working with my wife for the last 35 years or so. And it would be a misnomer to call her a loan officer assistant. She's an underwriter by trade, converted over into the loan officer assistant role, but really she's my boss as opposed to that. But in addition to that, I have a dedicated processor, dedicated closers, and everybody has to be on point with whatever the issue may become. So it's not just me, it's a team of people, but together, when you can combine minds and then, incorporate the real estate professional like Nicole, you have a pretty smooth transaction, as Nicole and I are going through one right now, and we're both very excited about that.
Yeah, no, you've been great, honestly. I love the VA loan product. I've always had a special place in my heart for that. And the reason I wanted to do these shows in such a niche manner, not just financing, but really digging into all the different types, is because I feel like in our industry, it's been done a disservice. And so we'll talk through some of those questions. But I think that our veterans have served, they have the right to get these benefits, and they're able to get these loans, and it doesn't mean the 100%, right? We'll talk about that, but it doesn't mean it's an inferior loan. It's like they have the right to do that, right? A lot of the VAs, the vets are super qualified. They don't have to. They have the down payment, but this is a right that they have. And so I think that making sure that we educate people, agents as well, so they understand like all these myths, right? And we'll kind of break through some of those, are not really like, it's not true. And,
you're so right. I mean, this VA benefit is so extraordinary. And just so we're really clear, the VA home loan program started in 1944.
Oh, wow.
And really, if you think about how advanced they are over all of the other loan programs, it's really pretty incredible. I mean, FHA has been around since 1938. But really, if you look at mortgage lending from the 40s, 50s, and 60s, and VA has just evolved. But I would agree with you, Nicole, that there is no better, no finer loan program, well ahead of its time when you compare it to FHA or conventional or USDA or jumbo lending. Because before I even begin, I'll just, one of the biggest benefits is there is no loan limit. So we're not limited by loan size. And so sometimes when you get the opportunity to work with individuals who are buying a house at $1 million or $1.5 million or $2 million, they don't realize that their entitlement is still available. But I'm jumping ahead of the whole
yeah, no, there's so much. I mean,
the whole schedule. But with that said, Nicole and I are going to uncover a minimum of 10 extraordinary benefits, the VA home loan program, that are out there. But my point was this: there's no better applicant, and there's no better loan program, and there is a lot of myths and fallacies regarding this product. So I didn't mean to jump ahead on.
No, you're good. This is an unscripted, it's like I said, whatever comes to your mind. Yeah.
I'm so passionate.
I know, me too. Yeah, I love that.
It's just like, because you are right. And in my classes, I share this with people. If 2 or 3 contracts come in on a listing, one of them is FHA, one of them is VA, and one of them is conventional. Unfortunately, the listing agent's going to lean in heavily on that conventional opportunity.
So let's talk. Let me segue that into a question.
Yeah.
So what do most people get completely wrong about the VA loan? Like in the circumstance you're sharing, so they're going to lean towards that conventional. And what are these agents? What are people looking at? What are they thinking? What are they misconceived about?
What they don't understand is the likelihood that the VA transaction will be approved as opposed to FHA or conventional. But here's what they really don't get. And we're going to jump into the appraisal question, because the VA appraisal process is perceived to be stricter than FHA and conventional, where in fact the VA appraisal has less restrictions on the appraiser than on a conventional loan or an FHA loan. So the listing agent naively thinks,
Yep.
oh, I've got a conventional, I got a VA, I need to go conventional. That's not good, clear thinking. Not only are we helping the veteran, but the likelihood of approval and closing is much greater with a VA transaction than it is with any other loan product.
I think some of the things that are out there is, with respect to the appraisal, agents will say, I'll get calls on my listing and say, like, will your seller consider a VA loan? And I always regard that question like, what kind of question is that? Like, because in my perspective, I'm like, yeah, they'll consider any loan as long as the buyer, the lender checks out that they're qualified and everything's good. And oftentimes the reason, what has been out there for years is that, like Grant said, the appraisal, right? So it's twofold. On the appraisal, we hear things about like, oh, they're going to have you fix all these things and blah, 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 and blah, blah, blah. Okay, well, the considerations from that are like safety and structural integrity. And a lot of the things that are going to come up on a quote unquote VA appraiser's list are things that are going to get flagged on a regular appraiser's list as well. Like if your banister is falling off and you can like fall off the staircase, if you have significant wood rot and damage on your roof, the appraiser's not going to be like, okay, we're good, right? So, safety, if you have, and you can add on anything like that they're looking for, but that's one thing, right? And so when I take a listing, I prepare and understand if that listing will be able to pass an FHA or a VA or things like that, just knowing, or financing period, right? But there are some things that are particular to a VA loan from that standpoint. And then the other side of it that I see with agents is like the appraisals come in so much lower. And I don't know where that came from, but it's like the dumbest thing. And it irritates me so much because it's nonsense. And at the end of the day, the one cool thing, and you could touch on this, but they have a thing in the VA appraisal process that if there is a discrepancy and that appraiser cannot validate the value and find, the value, you're under contract for 600 and he's struggling, they can enact something called Tidewater, which allows the appraiser to like come back and say, hey, I'm trying to make value here. Can you share something, some comps? Maybe I'm missing something. So that's like the only loan that lets you actually come to the appraiser and be like, hey, these are the comps, this is why, and give the appraiser the ability to like reevaluate. Obviously, you're going to give him stuff that has merit. If your stuff doesn't have merit, he's not going to throw it in there. He's like, but maybe they did. Maybe there was something that they didn't catch. Maybe there was a listing that they used that should not have been used, whatever it might have been. But that's a really cool feature as well, because
it's one of the Tidewater Act is probably the greatest feature on the appraisal process. But, as Nicole and I did on this transaction, we're working. And as we were talking about the contract, I said, Nicole, let's make sure you're the POC. You're the point of contact for the appraiser, because you're right. If the appraiser is struggling with the comparables, he will reach out to the POC, the point of contact, and say, look, I'm going to institute the Tidewater Act. You have 48 hours to submit some comparables, submit data or information that I may not have had access to. And before I complete my report, I'm going to get this data from you. Now, what's interesting, though, because VA and FHA have something called an escape clause. And this escape clause says if the property doesn't appraise, the veteran is not at risk on his deposit. There are times when the veteran would prefer that it appraise low so that they could renegotiate. There's times when the veteran would prefer that it appraised high, but at the end of the day, the veteran can still pay higher than the appraised value if they want to, or they can renegotiate it. But the more important part what you were saying just a few moments ago is everybody's looking at cost. Does first of all, the VA appraiser is going to get the work done in 7 business days.
Yeah.
Their costs are fixed. But you referenced, what's the difference between VA and, say, conventional or FHA? And the fact is there has to be a clear termite report.
Yes.
So if you take a listing, and any listing agents listening or any people are listening, and there's wood rot. Wood rot we call WDO, wood destroying organisms. If you're going to take a listing, I would tell you this, and I've been a seller, I've been a buyer, but I'm going to put my best foot forward. It's no different than speed dating. You want to look your best on that first date. Well, you need to have the house look good. Anything that you don't fix, someone else is going to notice, they're going to offer you less. So word to the wise should be sufficient. Let's let these houses put their best foot forward. And if you see wood rot around the door, fix it. Don't just say, oh, nobody will notice it. But if I were buying a house conventionally, I'd still want
everyone notices it. Everyone notices it. I'm so big on that when I talk to my sellers. I'm not going to list your house if it looks like crap. And if I am going to list it, you're going to be abundantly clear as to the outcome. Like people are not, your problems are, and yes, maybe in some markets back when, right, where like you could give it away and they would pay you with their boat and their second grandchild and they wanted it no matter what. Like that's different, but not today, especially. And people are looking at all these things because all the stuff they have to fix is going to come off your top. And if Joe Schmo down the street sold something for $300 and it was a brand new renovation, and yours is not, and it has holes in the walls and you have all sorts of, damage and everything, you're not getting that. So like, Grant was saying, you got to put your best foot forward for any loan, for anything. People might say, oh, I don't have to fix that.
Any listing,
even if you're getting a cash deal, people will say, oh, well, if it's going to be a problem for the appraiser, then I'm going to get cash. And I'm like, no, you have like a 36-year-old roof. Do you think a cash person's also going to be like, yeah, no problem. Sure, I'll take your roof and I'll pay for it too, right? Like it's leaking and no worries. Like that's not how it works. So, I appreciate you saying that, like putting your best foot forward, because that's the only way you can guarantee anything, VA, anything. It doesn't matter. You want to be the best.
It'll happen with a conventional loan. I mean, right now I'm doing a transaction in Port St. Lucie. It has a barrel tile roof. The barrel tile roof's about 23 years old. It's got problems. It's got issues, but it's conventional. Well, guess what? The seller and the buyer are having to negotiate. They're having to have a solution to the bad roof. Nobody wants to buy a house with a bad roof because at the end of the day, they're going, well, VA is stricter. That is a fallacy.
Yep.
What they're looking for, as you said, safety and security and structurally. But you don't want to have any buyer come in after the first 6 months or year and go, oh, now I have to go buy a roof. Much easier to address in the beginning, get it squared away, because it's just like in selling a car. You don't want to sell them a lemon, and you don't want to have them buy a house that's in that. And
they're going to do the inspections, right? So I always tell people it's not if, it's when. So it's not if they find it. It's when they find it. Like 99% of the time, it's not if, it's when. So with the VA loans, 0% down, what are some of the benefits that a veteran gets when they're able to take out a VA loan?
So let's back up and go to the very beginning, and then we'll go back.
Yeah, tell your story. You're good. You lead it. You're good.
I want to start from the beginning, and in the beginning, what happens is a veteran reaches out to either a qualified realtor who understands the VA home loan process, because it should be one of the first questions people ask. So the way I teach in my classes, as I said, if you're an agent and you're working with a buyer, the first 2 or 3 questions should be is, number one, what's your expectation in a house payment? Number two, what's your expectation in terms of cash to close? And number three, are you or your spouse a veteran? The real key is understanding whether we have a veteran either as one of the two sides, or certainly both of them. But as the agent will begin the process to work with someone, if they say my expectation in cash to close is very little, you're going to come back with, are you a veteran? Because, yes, the number one benefit to a VA home loan is that there is 0 down payment requirement. So that's huge. But backing up even before that, what the agent would need to do as they first begin speaking with someone is get that buyer broker agreement signed. That's been a big change in our industry, and I know that's not our topic for today, but I want to dispel the myth or fallacy that the buyer broker agreement is an issue or a big deal. With the VA on a buyer broker agreement, anyone, veteran or seller, can pay the commission to either party. So the VA made that change because they didn't want the veterans being penalized, saying, hey, on a conventional loan, the buyer can contribute towards the commission. Well, the VA made an exception and said, you know what, we're going to give our veterans full negotiating power. If the seller's not willing to pay the buyer agent commission, then the veteran can. So we're on equal playing field when we begin at the beginning with the buyer broker agreement.
But there is right? Correct me if I'm wrong. There is one caveat that if there's a transaction fee, like to the office, they cannot pay that.
You're 150% accurate. Is that, and I'm going to even go on record as saying that I am not a fan of any transaction fees. I believe, in my humble opinion, and no one really likes this statement, but I'm going to still say it, I'm not a fan of transaction fees. I would say, let your commission speak for itself. Let it cover transaction fees, and we won't have the issue. And I'll also forewarn agents across the country. Be very, very, very careful as you deal with transaction fees, because you could see the government come in and say, look, we're going to just ban transaction fees and we'll take care of this problem, because it's problematic. And I just think increase your commission to cover that piece. But that's just my opinion.
Right. No, I got you.
I understand expenses, inflation, everything is going up in cost. But Nicole, I'm really glad you brought that up. Transaction fees are not going to be paid by the veteran. But the first thing that a veteran would do is they would present their driver's license and their DD-214, their service release papers, to the lender. And that lender would take the driver's license and their DD-214, their service release papers, and any qualified lender within a matter of minutes, if not, depending upon their work schedule within that day, they can communicate with the VA and they can come back with what's called their COE, their Certificate of Eligibility. That is the biggest piece, because what that certificate eligibility tells us is, does the VA have any, and does the veteran still have full entitlement? The certificate of eligibility says what he can buy with 0 down or what he could buy with some money down. It also tells the lender, is the veteran exempt or non-exempt from the funding fee that they have to pay? And they'd also tell the lender how much money they receive in disability income. So all VA loans have what's called a funding fee. The VA does not have mortgage insurance. They have a funding fee.
Yep.
Disabled veterans do not pay a funding fee. So the next question I always get is, okay, what percent of disability do I need to receive in order to have my funding fee waived? And the answer is this. It's not a percentage. If the veteran is receiving any income from the VA for disability, they will waive the funding fee, not to be confused with county taxes.
Yep. I was going to say that.
Because your county taxes, who is the chief judge and executioner? That's the county. That's the tax collector. They determine whether or not a veteran has to pay taxes or not. You will find that if they are 100% disabled, the county will waive the taxes. But
the ad valorem.
That doesn't mean that the veteran isn't paying taxes and escrowing for taxes at the initial closing, because they are. It's not until after they close that they go to the county, present their disability paperwork, and the county will, make their determination. And if it is waived, the lender will immediately refund all money in escrows and adjust their payments accordingly. So don't be misconstrued about taxes, because taxes can be waived for disabled. But we were talking about this funding fee. The funding fee is really dependent upon whether it is for a first-time usage or whether it is for what we'll call subsequent uses. So, Nicole, we're going to go over humongous benefits. The veteran can use the VA entitlement, VA home loan program over and over and over again.
Yep.
Yes, they can have multiple VA loans at the same time. The big criteria here, though, is it must be owner occupied, no exceptions, period. The veteran must owner occupy the property. So I got a little carried away there, Nicole.
So what's the intent with that? So like veteran buys a house, it's their townhouse, they live in it for 5 years with their family. 2 years, what's the minimum, right? When you said owner occupied, because then you turn around and you outgrew the house.
That's a great question you asked, Nicole, is, what's the minimum time period? And I want to say this carefully. Number one, we are never looking to deceive or not tell the truth. But let's just say the veteran closes on a house. 6 months later, he or she and their spouse decide that, hey, this isn't working out. I want out. I want a divorce. The veteran isn't required to stay in that house for a year or two. If some intent changes and saying, hey, I'm leaving, or I'm being relocated
for a job or something.
I'm being relocated, or I'm even going from Broward up to Palm Beach County. As soon as he gets, transfer orders or job relocation, it doesn't matter whether it's 3 months, 6 months, a year or two down the road. With all intent, I would say a minimum of a year or two. If nothing changes, they could go out and then rent that property and then go buy another one.
Yeah.
So that's how that works.
Thanks for answering that. Yeah.
So with that said, I want to make sure you understand the veteran can have multiple VA loans at the same time. So it's all about how much entitlement do they have. And with a clean slate, as I started this program off with a clean slate, there is absolutely no loan limit. So if they're buying a $1 million or $2 million house, they can use that with zero down. But if they have a house against their entitlement, then there is a limit to what they can buy with zero down. But even with that said, even if there's some entitlement tied up, they could probably go and buy another $500,000 house and have a very limited down payment to make up for whatever entitlement they are missing. Mm-hmm. So what I would say, and Nicole started this, if you're going to get involved in the VA home loan process, get pre-approved, get your certificate of eligibility, find out what your entitlement is, and go jump into the market, because as Nicole and I will tell you, there is no better time than right now to buy a house. If you're thinking you're going to wait for rates to come down,
Talk about, I'm going to interrupt you. Talk about the rates for the VA.
Benefit here.
Let's talk about the rates and the refi-ing for VA. So let's plug that in.
That's exactly right. It's called an EARL.
Yep.
And it's not Earl as in the
Your
sandwich place, EARL. It's actually spelled IRRL. It's an interest rate reduction loan. And it gets me so excited because a veteran has an unfair competitive advantage over all other people refinancing. And that's because if the interest rate drops 0.5%, the veteran can do an interest rate reduction loan, lower their rate. It'll be a streamlined process. It'll be less cost, less hassle, really easy to do, and it doesn't exist on FHA and conventional. So the EARL is pretty exciting. But the other reason why I say now is the best time to buy as opposed to some other time is because if people wait for rates to come down, the market is going to get flooded with buyers. You're going to get into multiple offer situations. Yeah. You could come against a listing agent who is a little bit naive on the VA sales process or a VA loan. You may lose out on a few houses. Now is the time to strike. And Nicole, I'll let you speak to that about the, how the market has inventory, how the market has houses, and how they should sell right now.
Yeah, no. So I think that especially with the VA loan, I was actually going to mention about like how to make you competitive in any market. So if you're a realtor and you're not comfortable speaking to the benefits of this VA loan and trying to educate that listing agent on the other side, someone like Grant can make themselves available to have that conversation and kind of plug that in. Like, hey, we made an offer. Let me explain, the benefits and why, and, why your seller should really look at this more seriously. And you can help, right? So like to help make that offer attractive, because you might come across an agent or even a seller who's kind of like, they have their preconceived notions about it. And then you put yourself in that position. So when you are working with a lender and they are doing VA loans, speak to them about having that partnership to really help get that VA up front and center to help them look the best possible. But yeah, no, he's right. I mean, especially in this case, if the rates go down and then they can refinance that way. But of course, once we have a ton of people in the market and there's multiple offers, the prices go back up, right? So it just, you have it one way or another, right? So I definitely, agree with that. So I'm going to ask real quick, just kind of to segue, because I do a lot of condos. So veterans that are looking at houses, one thing. What is the landscape when it comes to VAs and condos and VA loans and condos?
I got to ask you, Nicole, is condo a 4-letter word or not? Because I perceive condo or condominiums as a 4-letter word as it relates to VA lending. If you have a condo that is either going to come on the market as a listing or the veteran's contemplating, you have to go to the VA website and see if the condominium is approved for VA financing. And so I actually did a search in South Florida around Fort Lauderdale not too long ago, and there was one or two.
I was saying there's not a ton. There's one or two.
Yeah, like one or two. It's very, very rare, and that's why I joke and I say condominiums is a 4-letter word. The veteran I'm assisting with on Nicole's listing, I had to say, look, we need to look at single-family houses. We need to look at townhouses, because townhouses are are good, but condominiums are more challenging. So and many people don't know because it's unusual the way the listing presents itself in MLS. It'll say condo or townhouse.
It's not unusual. It's garbage in, garbage out. And if the realtors are not putting it in correctly, which is a big part too.
So go to the county website.
Yep.
Go to the county website and look at the legal description. You know, and Nicole says, what separates me from maybe others? I'm not lazy. And lazy would kill a transaction, because if you're lazy and you don't look at the legal description and then you find out it's a condo, then you're in trouble. And then you have to cross-reference it against the VA website.
So when I take a listing, one of our checklist points is to look at the FHA website and look at the VA website and see if that condo has already been approved. That could happen via having a spot approval done by a previous buyer, and then it's put on that list. That could be done by the condo came and gave forth all the stuff so that they can get themselves approved. And then if you can advertise, once you know that, then you can now advertise that listing and say VA approved, or FHA approved as low as 3.5%, come one, come all. But then you can also, if your condo stacks up and has the things that would allow for the VA to be happy with the condo. And there's, we could leave that for another talk, but there's abilities with FHA and VA to do like a spot approval. So I had a condo in Margate, and they had the reserves. They had all their ducks in a row. They passed conventional, fully 3% down. They were on the CPM list for Fannie. They had gotten approved. Like, they went through a full condo questionnaire. They had all their ducks in a row. The only thing that they had was that they did have the restrictive covenants that would allow, which wouldn't let FHA and VA approve. But with VA, there was a waiver, right? So we did like a spot approval, and VA passed the condo because they had all these, things together. So they did, and they spot approved it for that specific buyer's transaction. And what came with it was a waiver that the buyer had to sign, acknowledging that she understands that this condo is age restrictive and has restrictions and resale restrictions and and things like that, and that she was okay with it. So that's something that VA does have, right? But FHA doesn't have that waiver ability. And so we had it pass with that one condo, but you got to also do the research first before you go down that road to see if it's even worth that. But I have gotten a few spots on VAs on some condos here and there.
And obviously, the tragedy in Surfside, Florida, with that condo problem, I happen to be a bigger advocate of townhouses and single family homes than condos. But for some, it's a good match. But you'll be challenged. And so listing agents do the homework in advance. See if your lender, cross-reference it, see if you can get a spot approval. But Nicole mentioned a few of the things. She mentioned, what's the HOA budget? She mentioned, are there restrictive covenants against age situations?
The association can deny a buyer, right? Like that they have the right to do an approval or denial.
And is there some type of buyback where the
right
HOA
of first
says,
refusal.
we don't want you selling for this price and we'll buy the unit. So you've just got to be careful. But I want to, jump ahead off of the condo question and go back to, some of the, major benefits that veterans have, because we were, certainly everybody knows that zero down is huge. But with subsequent purchases, they may be better off. And what do I mean? First, let me define subsequent purchase. Say they used their VA entitlement 20, 30 years ago. They paid off the house. They're going to buy a house now. If they are not a disabled veteran, not receiving disability from the VA, their funding fee jumps to 3.3% from the original 2.15%. All that means is we're adding 2%, 2.15% to the loan amount, but in a subsequent purchase with nothing down, it's 3.3%. So what I advise all veterans to do on the second, third, and fourth time they're utilizing their VA benefit is to put 5% down. It will drop the funding fee more than 50%. It takes it from 3.3 down to 1.5%. So it's a big drop in the VA funding fee. So word to the wise should be sufficient. If you've used it before, contemplate if the ability is there to put 5% down. And I don't know if you know this or not, Nicole, the average down payment for a veteran isn't zero. It's actually 2%. That's because so many veterans using it again use that tip, technique, or strategy and put 5% down or 10% down to really lower that funding fee.
Or even to lower the payment, right? So like if you were a veteran and you bought a house, you sold your house and you cleared 200 grand and now you're buying another house, you may not want a mortgage. I had one, they didn't want to have a high mortgage payment. So they used their VA loan and their rates were lower than the average loan as well.
You just hit another
the rates are lower, right? On average.
Talking point is, and everybody doesn't understand it or know why. FHA and VA have lower rates than conventional financing.
Yeah.
It's because the loan is worth more to the lender. The lender can sell that loan, keep it in its portfolio, but the loan has more value than a conventional loan.
Which is so funny when people just poo-poo those two. VA and FHA are seen as inferior.
You get no down payment, lower rates, and the listing agent. If I were a listing agent, I would be putting out there VA-friendly realtor here. Veterans welcome. You would open yourself up in MLS to a lot more contracts or offers on your property. If you put in that listing first and foremost, veterans welcome here and VA friendly realtor here. I mean, first of all, everybody knows there is a crisis going on in the world, as there is usually.
Yeah.
But we need to support our veterans. And this is the, next to healthcare, I would put the VA home loan benefit as the greatest benefit that they have. The three greatest benefits, just so you're clear: healthcare, home purchasing, and education. Mm-hmm. Florida aims to be the most friendly VA state in the country. We're challenged, and who challenges us? Texas and California. The states with the most amount of veterans are utilizing the products: Florida, Texas, and California. I would tell you that I'll take Florida over those other two states every day of the week and twice on Sunday. But I digress. So, Nicole, I'll let you go back. But that is my humble, honest opinion.
So one thing, too, that comes to mind is, because this actually came up in a conversation I had with someone, and they had said, because it was a seller, and they had said, as a seller, I'm a veteran, I get no closing costs. And I was like, hang on. So we backed it out, and I was trying to explain to them, when you are a buyer and you are buying with a VA loan, I've seen where there is some misconception that the VA loan is not only 0% down, but that they don't have closing costs. That's something that I hear a lot about. And I know that's not true, right? And we know that. So where that comes from, right? So where that comes from is the idea behind the fact that you can negotiate a seller concession up to, a percentage that would allow you to not have to bring that out of pocket. But I've had many people say, well, I don't have to bring anything. And so dispel that for the veteran out there to explain, that, because yes, it could be a 0% loan, but there are closing costs. Like you said, there's a funding fee. There's other things involved, and they could be financed as well, potentially, right? Maybe speak to that a little.
I don't think people realize why it is more expensive to buy a house in Florida than it is in many other states. So I'll just come right out and tell you exactly why Florida has more closing costs related to real estate Two things. Number one, real estate's almost 25% of the gross state product in Florida.
Right.
But number two, Florida doesn't have state income tax.
Yep.
So when we don't have state income tax, how does Florida make money? It's through that 25% of the gross state product. It's through real estate. And so, yes, the buyer has closing costs and the seller has closing costs. To give you percentages, the seller cost, excluding commission, is about 1.5 to 1.75% of the sales price. The buyer's cost is approximately 3%. Yes. Oh, so we come up against this. Can the seller pay all of the veteran's closing costs if they want to, and the offer is worthy of it? And the answer is yes. There is no, I want to make sure I'm clear here. There is no limit to the closing cost that a seller can pay for a veteran. However, there is a 4% seller concession to the veteran. So we got to unpack that. Number one, if it's a genuine closing cost, seller can pay it. But if it's an inducement to buy, if it's a seller concession like carpeting, like paying the funding fee, like paying those, we're limited in inducements to buy and seller concessions to 4%. But if it's a genuine stamps on the deed, title insurance, genuine closing costs, the seller can pay it if the offer is worthy and the seller can, make ends meet. So you're right. Veterans aren't coming in. And I do have some veterans tell me, look, I don't want to pay a thing. Well, we're going to need an awfully nice seller to make this happen. Or you'll have to go new construction and find a builder who's willing to pay all the closing costs. And quite frankly, there are.
Yeah. And it depends on the market you're in, and it depends how you structure the offer as well. So you could potentially build it in, if there's wiggle room for there to be, a higher appraisal or whatever might be the case, because in some cases, a lot of the appraisals are backwards, and a lot of the market that we're in is not looking at a year back, like the prices might be higher back then. So some of our current standards of what buyers are looking at, you may not be able to get. So you could potentially make the offer in a way that would bake that in for the seller too, right? So it's all about the strategy and understanding how to really look at the full picture as the agent as well as the loan officer to help you get that. But thanks. I just wanted to make sure I touched on that because that was something I hear a lot of, and I got that a couple of days ago actually from somebody too.
So if there's agents eavesdropping on your podcast,
the purpose is for them to learn too. That's really the idea.
Let me, as we begin to wind down, I am going to beg agents to get educated on the VA home loan process. There's the website, the VA website. If you go into benefits, the VA has a VA home buying guide. But I want to beg the agents, whether you're a buyer's agent or listing agent, to get educated, to get your military relocation professional designation. If you're blessed at an association I'm not selling or promoting any of my classes, but I will tell you that VA finance calculations made easy. You need to learn a little bit about that, but really navigating the VA sales process, familiarizing yourself with the whole entire process. There's a lot of addendums, and as we wrap up, I don't want to leave this without talking about what is a surviving spouse. Mm-hmm. Because a lot of people feel that a surviving spouse is the spouse of a veteran who is deceased. That is not accurate. A surviving spouse is a spouse whose husband or wife died from a service-connected disability. So if their spouse was in Vietnam, they got hit with Agent Orange, this terrible disease and what the enemies do to combat things in war. But with that, if the veteran dies of a service-connected disability, the spouse, as long as they are not remarried, still has survivor benefits. So that's a big deal, the surviving spouse. But there's so much. I mean, Nicole and I can only go into...
Yeah, we can talk for hours. I was going to say, is there anything like burning that we may have missed, or we can always plug it on another one in the future? But I think we touched on a lot.
I just keep pressing, I'll end the way we started. Nicole said, hey, what makes you different? And what makes me and other qualified lenders different is the time, the research, the care, and the education we spend making sure we know the process backwards and forwards. And that's why when I first met Nicole, I said, Nicole, I'm a VA specialist, and it means something. And I can guarantee you this, I'm going to close on time. The veteran's already gone through my process of pre-approval, and it is going to be one of the more enjoyable transactions you've ever had. And if we can get this estoppel, we'll be closing early. But whether it's
no, you've been great, and I grilled you. I grilled you, and on that one we had a lot of really good. We had decent. Honestly, it's not very common, but I had a lot of. Everyone was really put together, and the loan officers were all really put together. But I grill you guys because unfortunately that is going to affect your client. So don't just get the pre-approval sellers agents. Talk to the lender, know what questions to ask, know what to see, to look for, to make sure they're not, just kind of giving you some hot air and, oh yes, and I've been doing this. Like, you were impressive. You shared stuff that made me realize, all right, this dude knows what he's doing. Like, and we should be comfortable.
Well, to compliment you, Nicole, you have, a lender questionnaire. I don't even know if you know what you have, but I actually teach what you have. Is you were asking all of the right questions. But to me, a person who asks the right questions, she could tell I wasn't balking at anything. I'm going, I got you here, I got you here, I got you here. I have these things. So you're right, a solid pre-approval, getting everybody pre-approved in advance. But you can close a VA loan in 21 days without issue.
Yep.
We're going to, the question becomes, do you do the home inspection first or do you do the appraisal? It's a question of, are you questioning value or are you questioning condition?
What's the path of least the biggest problem?
You can do them both in advance. Qualified lenders will do VA loan. They'll make your head spin how fast we could do a VA loan. Yeah. So I want to thank you for the time.
No, thank you. And tell the people out there where they can reach you and if they have any questions.
It's very, very easy. My website is my name. It's as you see it on the screen. My website's grantsimon.com, www.grantsimon.com. If you want to find me, if you want to ask any questions, if you want to apply online, if I can help you save a deal, or more importantly, if I can help you help a veteran, I don't even have to be involved in the transaction. But of all things, if you need an agent, Nicole's on point.
Oh, thank you.
She knows what she's doing. She has this podcast. So I am honored and privileged and very happy to have been here and shared with you today. I hope you learned a little something, and I hope in the next 3 to 6 months you help a veteran. So thank you, Nicole.
Amazing. Thank you for being here. Thank you for helping drop some knowledge. Everyone out there, if you have any questions, don't hesitate to reach out to either Grant or myself. We'd love to be a resource. And if you know anyone who might benefit from the content of this show, please share, subscribe, because the goal is to make sure that you have all the information to make the best decisions for yourself. Thank you for joining me, and I look forward to seeing you guys on the next one.